We've certainly had a reminder this week. Even if you do stick to fiscal rules and try and create those checks and balances, bond markets are pretty unforgiving. In the US, I think this, after the election, could become much more starkly in focus because reports are that the Republicans are pretty sanguine about potentially increasing by as much as $5 trillion spending. That's what it takes to extend those tax extensions. In terms of what the bond market reaction will be, is one of those things that's very hard to tell kind of until it happens. I think, as we saw yesterday, the day before yesterday, with Rachel Reeves's budget, the initial response to that was quite positive, and it's only as markets began to digest the fact that it was going to involve more borrowing that we saw that much more negative move over the last few days.
Well, and spending that doesn't really add to GDP. I mean, that is one of the issues. If you're going to spend and you're going to invest, you want to see productivity gains. I mean, that's been one of the basic rules if you're investing and spending more money, and that was simply not coming through yesterday. Now, as we're talking about whether some of the revenue will ever materialise in some of the measures, and whether we're going to see debt for as far as the eye can see, and whether that's going to go up even more. At a time when markets have seen debt piles increase on the back of a number of different crises, isn't it time to think, well, we're not in crisis mode now. We're not facing a major threat right now. Isn't it time to reduce some of the debt so we have what the IMF has been talking about, fiscal space to prepare for something else if it does present itself?
Well, I think there's sort of two parts to the budget, thinking sort of more of the UK example. In the near term, certainly increasing public sector spending is going to increase GDP in the near term, but you're completely right to make that point about productivity. It probably doesn't do a huge amount for productivity. I think there is this longer term question about investment. Now, you can't really increase productivity growth without investing, but investing doesn't necessarily guarantee you're going to get that productivity increase. So I think that is where the test is going to come, and unfortunately we're not going to find out for some time whether Reeves has passed that test. So sentiment around the UK, it may be some time before there is greater confidence there.
Which